Guys, how many days y'all get off for Labor Day? Y'all don't have Friday and Monday classes? It don't matter then, does it? Well, me, probably just Monday. But anyway, oh boy, I brought up the corporate tax. All right, we've looked at chapter 2, and we've worked some problems on computative taxes, and we've looked at dependents, and we've looked at joint returns, and we've looked at a 1040, and we did a lot in chapter 2. Now, chapter 3 is inclusions, and chapter 4 will be exclusions. So once we get these chapters in, we're going slow, we will have a test. It will be open book test. Don't know if it'll be take home, but it will be open book. All right, the accounting concept of income, and money, values are measured when a transaction, sales price, basis, whatever. So we know what the accounting concept of income is. It's money, okay? And accounting concept of income, realization, transaction with a second party, and we know that servants in economic interest in property. If one person buys, the other one is selling, and the seller gives up his economic interest. That's simple stuff. All right. Tax concept of income. We're looking at realization and recognition. Some of these things you don't have to worry about. Now, this is where we got up to the other day, and we kept looking at these income. And we need to look at these in a little more detail than we did in the other chapter. And all your income goes on the front of the 1040. All your income from any source. Now, if you were to find $5 bill, you're supposed to put it down here under other income. Okay? Don't know how many of you would, but you're supposed to. All right? Now, as I said the other day, if Jonathan gave his paycheck to a friend, Jonathan's the one that's taxed on it. And we know income from interest and dividends and royalties are taxable. Married couples, common law states income tax to spouse who earns the income. All right? Now, that's in a common law state. Community property state, property acquired after marriage is split 50-50. But now, not your paycheck though. If you're married, Jonathan, when you get married and you file separate, her paycheck goes on her return, your paycheck goes on yours. So this is misleading, but now everything you own is separate. Now, I had to be careful. My ex-wife, I had a deceased wife. 2 years later, I got married. and it was a marriage from hell. Okay, didn't know she was bipolar at the time. So we lived together 2 years. We divorced. Still dated for 2 years. She got medicine finally, and she's okay. So now she is back with me. But we were married, but now we're not married. And I don't want to share our property 50-50 with her because we are in a community property state, but we're not married. Income earned by minor and children is taxed to the child. But now we can find out later unearned income might be taxed to the parents. That's the kitty tax. Income is recognized when actual construction received. If you got a paycheck on December, you haven't cashed it, you still got the money. You are taxed on it. And if you get income in property, then you're supposed to be taxed on the fair market value of the property. Now here, I was wrong here. I didn't pay attention to it at the time, but lady used to cut my hair. I did her payroll tax with just one employee. I did her payroll tax for her and had to do it quarterly. And so she cut my hair free. I did her payroll free. Now, she should have been taxed on the value of my haircut, and I should have been taxed on the value of my haircut also. But we bartered, we traded. All right, if the income's made available to you. Now, if you got a paycheck laying around at work on December and you've got a right to go pick it up, if you don't go pick it up, it's still income to you. All right, exemptions to recognizing income, Series EE bonds. In Clayton, you might be able to put that on education or medical, not be taxed on it. Foreman income, that's a different story. We don't get into that much, okay? The accrual method is what we're on for corporations, but you are a cash basis. You don't worry about accrual basis. But now, whatever you learned about accrual basis in accounting, a couple of things change about that in taxes, all right? Especially with prepaid items. Prepaid income recognized when received. So if you got unearned rent, maybe you got $1,000, $200 a month for 5 months rent. You recognize the whole 1,000. Okay. Services is different. Okay, items of gross income, wages, salaries, bonuses, business income, any kind of trade or business you're in, a proprietorship. I've done those for many years. I've been involved in all forms of these businesses. I still do tax returns, so I'm a sole proprietor. I had a couple different used car lots. I was in partnerships, and I helped some folks start a corporation, and I was one of the principal owners of that corporation for a while until I sold out. Gain from sale of property. Return of capital. Now, if you're paying life insurance and they return you some premiums, that's not taxable. Now, if you sell some oil, gas, these are capital gain, land, bond, stock. But we'll look at those. Right now, they're just bypassing in the wind. Interest is taxable. Interest revenue from corporate bonds, mortgage, life insurance, and bank deposits. Excludes a tax-exempt interest, which is on municipal bonds. Mercer County may have a municipal bond floating. I don't know. A lot of the counties have municipal bonds floating to build hospitals or schools or what have you, or rec parks or something. Series EE saving bonds, etc. Interest can be included if taxpayer meets all the following criteria. Can be excluded. Let me reword that. Excluded. If you purchase bonds after 89, if you're 24 or older, they can't be a gift. Bond proceeds must be used for tuition and fees. All right. So if you use that interest on tuition fees and the bond principal, you may exclude it from taxes. Now, some of you are luckier than others when it comes to textbooks. I'm losing a couple of students out of Prince-William County. One guy's financial aid hadn't come through yet, and this is 3 weeks. 20% of the semester's gone. And one guy, he had enough money to pay his tuition, but can't buy his books. He hadn't got any books. So I don't know what we can do for those students. It's tough. And I have sympathy for them. Now, if it's a Series EE bond, here's your exclusion. All right. If qualified education expense is less than the principal plus interest, then any or only part of the interest is excluded. All right. Now, if you had qualified educational expenses, and I don't know if my doodad here will ride or not, your education expenses, let's say for one semester, is $3,000. Now, let's say you had bonds and interest worth $2,200. All right. That's not a good formula because it already says exclude. That's not a good formula that they're giving you. We may have to look at this in the book. Rents and royalty income is included. Security deposits are not income. Do any of you have to pay a security deposit? Do you have to pay the electric company a deposit? Do you have to pay the telephone company a deposit? Do you have to pay a deposit for rent? Some people do, a damage deposit. That's not income since it's owed back to the people if there's no damage done. Improvements by lessees are not included in the leaseor's income. Now, if you paint the landlord's property and he lets your rent go, then the landlord should include that rent. All right? And you should include your services as wages for painting that house. Dividends generally included in gross income, GI. C corporation includes 70 to 10, but that's second semester. Individual dividend rates are capped at 28%. Generally, dividend rules apply only to individuals from U.S. companies. All right, let's say you got 1,000 in dividends. The highest rate you'll probably pay is 15%. You may be in a 20% tax rate, so you're saving 5%. Capital gain dividends are taxed. Constructive dividend is a treat, but usually asserted by the IRS. may or may not be taxable. Occurs when employee shareholders are determined to have other unreasonable compensation or unreported benefits. Now, here is the situation. You cannot pay somebody, a child, $50,000 a year for doing your bookkeeping when you could have got it done for $10,000 or less, a private bookkeeper. All right. Maximum dividend rates 10 to 15% usually. All right. This is your bracket. If you're in between those brackets, now, did they give you the brackets, the new brackets in chapter 2? Now, in the front of your book, let's see if they've got the new brackets. These look like all right, go over to the front of your book, the hard part. Look at the front, the hard part. Clayton, have you got your book? Or
Yeah.
all right. Now, if you go to the front of your book, if this is for 2018, you can pay up to 37%. But what if you make 39,000? You would be in a 28% bracket. But for dividends, you'd only pay 15%. Okay, so even if you pay 35% in taxes, you only pay 15. But now if you're in a 39% bracket, you pay 20. All right, look at this form. I don't know if I can blow it up. Can you see this form? It's a Schedule AB. Now you put your interest and ordinary dividends up here, whether it's Wells Fargo Bank or Community Bank. Down here, you put your ordinary dividends. All right, but up here, interest and dividends. And you transfer it to the 1040. Okay. Schedule AB, that's interest, dividends, and the other side is itemized deductions. Payments instant to a divorce. All right. Nobody's taxed on this. Nobody. Nobody usually is taxed on this. So which one is taxable? Alimony. Taxable. So Clayton, if you get married and you divorce and your wife pays you alimony, it's taxable, isn't it? All right. But now, Clayton, if you have to pay alimony, it's taxable to your wife, isn't it? But it is a deduction for AGI for you. It's a deduction for you, included by your wife. Taxability of divorce payments. Here's what I was telling Clayton. I mentioned that, and I mentioned that. Okay, now, Jonathan, you got to pay $500 a month for child support, and you're paying $400 a month alimony. Now, my daughter is divorced. She had a child, and her daughter, my granddaughter, gets $1,100 a month child support. Pretty good, isn't it? So some families, some mothers are lucky to get $500 a month for 3 kids, but my daughter gets $1,100 a month for 1 kid. All right. Now this is child support, right? This is alimony. Now, Jonathan, you can only pay $700 this month. You lost your job. Doesn't matter if your wife takes you, ex-wife takes you to court or not. You're going to pay her $700. So who gets that $700? Child support first or alimony first? Take a guess. Which one do you think is paid first, child support or alimony? Be child support. So, Jonathan, you only paid $200 a month this month on alimony, and $200 is all you could take on your 1040 adjustment, and $200 is all she has to include. Now, you may catch up, and that's different, okay? You got to pay alimony in cash. It's usually a written agreement. All right. I had a prenup when I divorced this woman, and I was supposed to pay her $600 alimony for 6 months. But we worked that out. It was in the settlement. I still lost a lot of money in a car. Just being married to her for 2 years. So you understand why I don't want to marry her again. Okay. Payments terminate at death. Of course. Did you ever see a dead person pay alimony? Did you ever see a dead person receive alimony? It has to be alimony. You have to be in separate households. And we know that life insurance to face value. Okay, now, Cole, here's a question for you. You have $100,000 life insurance. Let's say on your daddy. Unless he dies and you get $100,000. It's tax free, right? But what if the insurance company offers you $10,000 a year for 11 years? That'd be $110,000. Would you maybe take that deal? The what? Are you taking finance this semester? Are you taking finance? Not taking it yet? Oh, you're an intermediate accounting, no. Have you got the present value yet? You will. First off, you'll take that 100,000 and see what it'd be worth at the end of the 11 years, and you took it and invested. You'll take this 10,000 a year and invest it. It's called an annuity. See what it'd be worth. Or you can do the reverse of that and look to present value. And this may not be a good deal when the insurance companies make those offers, and they do make them. So when you learn about present value, you'll see what I'm talking about. Okay, life insurance, not taxable. But now, if you put that in a bank and you get $1,000 interest, is that $1,000 income taxable? Yes. Discharge of in debt. All right, this is a biggie. Were any of you ever discharged of a debt? A few years ago, people got in trouble with credit cards. Credit card company discharged them a debt. All right. And of course, you have to pay taxes on it. Malamazur, is anybody taking econ? I did his taxes last year. He wouldn't care if I told this part. He was forgiven in student loans of about $25,000. All right. Now, back when I had the federal grant, student loans, whatever they called them, in the teaching field in the Appalachia region, we were called a poverty-stricken region. We still are. It would cancel out 15% a year for every year I taught. All mine was gone. I was not taxed on it. I was forgiven that debt. But now I'm out of Missouri, come under none of those conditions. Now I tried to report it. Hopefully they wouldn't tax him on it. I told him what I was doing. But they sent him a tax bill. He has to pay taxes on that $25,000 student loan forgiveness of debt. So these people who have credit cards do the same thing. Generally, interest, dividends, royalties are taxed to the recipient. Okay, anybody ever win a prize for anything? Prizes, awards, treasure, triplet, lottery, gambling, weddings. All right, first off, gambling winnings are taxable. My sister won $10,000 on a scratch ticket, but she kept a lot of her scratch tickets. You have to itemize, and you can take your losses against your gain. The lottery, you're taxed on it, but I would take it if I could win it. Prizes. Game shows. You ever watch the game shows? Who Wants to Be a Millionaire and Price is Right? They're taxed on that. They're taxed on it. Now, I'd rather have cash of $25,000. I'd pay my taxes on it than have them to give me a $35,000 car and I pay taxes on the fair market value. Let me take my 25 and I'll get a cheaper car. So there used to be a contest and you got to enter the contest. If you could unscramble that, it has something to do with a sewing machine. So what would it spell if you unscrambled and it had something to do with a sewing machine? I would put SEW, wouldn't you? A lot of people had to send that in, and it made them eligible for a prize, but still the prize is taxable. All right. My deceased mother-in-law won $20,000 in cheese. $20,000 in cheese. She was teaching school at the time, and she was in a 25% tax bracket. Well, what is 25% of 20,000? 5,000. IRS wanted her to pay 5,000 taxes if she took the 20,000 in cheese. She'd have to store it. Now, international cheese lovers, who she want it from. Now, I could take the 5,000 I save in taxes and buy all the cheese I wanted. Now, her other option was to take a necklace valued at $99. Some kind of sterling necklace with a little pendant on it. I advised her to take the $99 necklace because I did not want her to pay $5,000 on cheese that she had nowhere to store. But that was her option, and she took the $99 necklace. Now, community college used to give me awards. They'd give me a watch for 5 years, a fishing pole for 10 years, something or other. That was little bitty awards, not taxable. But now, if awards, we'll look at that in more detail. Illegal income. Clayton, you got any illegal income?
I had one.
The what?
I had one over the summer.
Clayton did have illegal income. He was paid under the table. It was legal income, but your employer handled it illegal. And you're still not illegal. You can report that on your 2018 tax return. You could still be legal. What are some forms of illegal income? Come on, Cole. Illegal income. Have you ever heard of prostitution? It's illegal income. Have you ever heard of black market? Have you heard of moonshining? Blackmail, extortion, illegal income. Theft, robbing somebody, breaking and entering, taking stuff, illegal income. All right. Now I told you all that Al Capone, back in the day, I don't know if it's 50s or what, he was only prosecuted on tax evasion. Didn't pay his taxes. But Al Capone was mixed up in murder, prostitution, extortion, moonshining, every illegal trade he was in it. But they couldn't prove it, but they did prove tax fraud. Now, IRS can go value your assets, your house, your car. If your assets, let's say, value $200,000, you can't buy a $100,000 home on $15,000 a year income. You cannot. That's what IRS does, and that's what they compare and figure. And they can come in and charge you taxes just the stuff you own. Now, if you got it in an inheritance or a gift, you better prove it. Illegal income. Now, I told you about the best little red lighthouse in Tennessee. All right, I thought it did. Where IRS went down to the cleaners and seen how many sheets were cleaned that year. Now, a secretary in Vegas, not a secretary, but a waitress in Vegas, she was reporting about $22,000 a year income in tips. And she was driving around a high-priced BMW. Her apartment rent was $2,000 a month. What's 2,000 times 12? How can you pay rent if you only made 22? IRS compared that, and they got an average of all waitresses in the Vegas casinos, and with tips and everything, they averaged $94,000 a year, and that's what they taxed her on. Illegal income. It's taxable. Now, I'm supposed to report illegal income. Now, if I do a 1040 and I had a prostitution house, I want to be illegal with IRS. I put down my income and my expenses. I pay taxes on my illegal activity. I wonder if IRS would turn that over to the state or some other department, shut me down, send me to jail for illegal prostitution. But you're supposed to do a tax return on illegal business, even if it's moonshine. Would IRS set in the moonshiners breaking up steals and things? I don't know. Unemployment comp, state of West Virginia pays one of the best. And if you get unemployment comp, it did not used to be taxable. It is now. All right, we got to follow this formula. Social Security. This is all right. Let's say your Social Security. Let's say your Social Security is $1,000 a month. Now, usually that's not taxable. But what is 85% of it? Somebody got a calculator? What's 85% of 12,000? How much? 10,200. Now it says include the lesser of 85% of your benefits. We just did that. Or 85% of your provisional income. All right. And let's say your income was 20,000. What's 85% of that? What's 85% of 20,000? That's 17,000. All right, let's say this was your provisional income, this is your Social Security. Include lesser of 85% of Social Security benefits or 85% here. We want to include this, we can get it. So we're going to be taxed on 10,200. So sometimes it don't pay to work, okay? It costs me to work. Social Security Administration charges me double. On Medicaid Part B, I don't want D, but they charge me for Part D. So I don't get to subtract out too much of my Social Security. So I'm penalized for working. Okay. All right. Does the taxpayer's personal income fall between the following thresholds? All right. Head of household 25 but not 34. Married filing jointly 32 but not 44. If yes, include the lesser of. Now look at this one. In some cases you're only taxed. In some cases you're taxed at 85%. Some cases you're taxed at 50%. So we got to know those as we go along. But here, if you fall in between, now step one, calculate your provisional income, which is your AGI. And you do have to add your tax exempt interest, but you can exclude foreign income. That's your provisional income is usually your personal income. I want to get down to, all right, here's what I want to get down to, zero. Now your Social Security is going to be taxed at 85 or 50 or zero. All right. Can't touch this thing, wrong. All right, there's the three Social Security rates, 0, 50, 85. Now here, if you make between married filing jointly, if you make less than 32,000, zero. Single, if you make less than 25 altogether, zero. So now if you get up here, you may pay 50%. And up here, you may pay 85. We'll have to look at that. Now, there are schedules we can download from IRS to calculate that. Now, if you get insurance for lost profits, down my way, I had a little service station. The wind blew the tops off over the pumps and damage the pumps covered on the way down. They still don't have that repaired, but that store is losing lost profits. If the insurance company pays them for lost profits, they're going to be taxed on them, aren't they? All right. Now, insurance proceeds are taxable. We're not talking about life insurance. Okay, now court awards. If you're hurt in a car accident, you got a whiplash, you're going to collect from the insurance. It's tax-free. That's injury. If you get insurance back for your property, if you wreck your car, the insurance company fixes it. All right. Involuntary conversion proceeds are fully reinvested. Now, involuntary conversion, if you wreck your car, is that involuntary? Hopefully it is. But windstorms and hailstorms and floods are involuntary conversions if a natural disaster took out your property. All right, so court awards are taxable, except for physical injury that I told you about. All right, now look at this. In taxes, we'll come up on this. You deduct $1,000 of state taxes on your federal tax. If she finds out, when she files her state taxes, 2017, they received a $200 refund, which was paid to her in May. Cindy will recognize the $200,000 as a result. All right, what this is, you itemize, you take 1,000 in state taxes. You can only go by what's on your W-2 form. All right, IRS gives you 1,000 today. You do your state tax, and the state tax is only $800. So, IRS gave you a refund. Okay, so they want you to report that refund next year, just because of your state tax. But we'll work that out on the forms. It'll be easier when we do the forms. Claim the right. All right, now that's a little touch up of chapter 3, okay? But there's more to chapter 3 that I've got to point out to you. Now, those problems in chapter 2, we'll get back to those and look at them Tuesday, anything we didn't wrap up. And meanwhile, I want you to be looking at the problems, even problems in chapter 3. And we'll get the first few of those on Tuesday. All right, I want you to look at page 21 of your textbook. Yeah, Jonathan?
Are we gonna go with 1040?
Oh, yeah, how about that 1040? The one we had to do for homework?
Yeah.
You haven't handed it in yet? You got it? Cole, you got yours? Clayton, you got yours? Okay, get them out. We'll do that next after I do one thing here. I'm glad you asked. All right. I want you to look at page 21, 3-21. Okay, let's say you're about 20 years old. How long do you expect to live? All right, if you're 20 years old, how long do you expect to live? It shows you. Pick out a number there, Jonathan.
61.
You're expected to live about 62 years. And add your 22, that's 82. Okay? Now, you guys are lucky. Is everybody over 20? Oh, you're what?
19.
Now, if life were a football game, and every quarter was 20 minutes, your life every quarter was 20 years. Now, Cole is still in his first quarter. He's not even reached 20 yet. Now, who is 21? Who's 20? Who's over 20? Clay. How old are you? All right, Clayton's already 20. His first quarter has expired. He's starting on his second quarter. And when he gets 40, his second quarter will expire. When he gets 60, his third quarter expires. When he gets 80, his fourth quarter expires. And anything above 80 is either overtime or sudden death. Okay? Makes sense? Of course, obviously, I'm in my fourth quarter. All right? My first quarter and the second quarter is gone, my halftime's gone, my third quarter is gone. Okay? I'm working on my fourth quarter. I just hope I get some overtime sometime. All right. Okay, you're expected to live. All right, jot that number down on a piece of paper somewhere. You're expected to live 61 point what?
61.9.
Jot that down on a piece of paper. All right. Now, however, let's look at a couple other things here. What if you were already 65? How many years you have left? 20. That means 85. Now, what if you were already 100? How many years do you have left? 2.7. Hey, we've got some 100-year-old people, don't we? They don't have long left. All right. My mother-in-law, when she was 90 years old, she had 5 years left. She made it that 5 years. She lived to 95. All right. Now keep that number down that I had you to write it down. Now let's go back and look at pensions and annuities. All right. Now look down on page 21 and look at example 29. Now read these examples in your book. David is age 65, purchases annuity for $28,800. Under terms of annuity, David is to receive $300 a month for the rest of his life. All right. Now, your information, you're going to buy an annuity at 20 years old. All right. You're expected to receive $100 a month for the rest of your life. Now, you're expected to live, and we know this times 12 is 1,200, don't we? Now, you're expected to live 61.9. Now, multiply that by this 1,200. Was it 60 or 61?
61.
All right, and what have you got? How much? How much is that, Jonathan?
74,000.
That's what you're going to receive, right? But now let's say you went out there and paid $60,000 a day for that policy. Hey, here's $60,000. I want $100 a month for the rest of my life. But now we know that you're going to have $14,280 in income. We know that, but how are you taxed on it? So I want you to read this example, and you put these numbers in the right formula and see how much you're taxed on. And we're down to bullet 2. We've got our expected return of 74,280. Now go to bullet 3. Now, how do you set up bullet 3 there? What do? Don't you divide the 60,000? All right, now do that. All right, what is that decimal, folks? What's the decimal? It's a big decimal. What is it? At least over 6, 7. What is it? 0.78. Well, I'd take this out 3 places, and I would make that decimal 808. Now that's, if you change that to percent, that's 80%, isn't it? That's about 81%. Now we can just round off to 81% if you want to. So now you're getting $1,200 a year. How much of that had you already paid taxes on? All right, take that $1,200 you're getting a year and multiply it by that 81. What do you get? How much? 72. Now, that's the amount you will not be taxed on because you paid for that. Now subtract 972 from 1,200. $200 and what? That's what you're taxed on. Now that's what the annuity table is for, and that's what that example is for. And okay, so you are taxed on annuities and pensions, which the PowerPoint slides did not bring that out, but I wanted to bring that out. Okay, so the PowerPoint slides didn't bring up a few other little items. I think you will be able to get those. All right, now what problem was that on?
Problem 64. Page 242.
Page 2 and 42. All right, I do not have a solution on my computer for that. We're going to look at it together. Now, which problem was that? 0 or 60 or 61? 61? All right. Now, you folks out there in viewing land, you were supposed to have problem 61 work. You're supposed to work the even problems in chapter 2. You're assigned to read chapter 3, and you're supposed to start working on the even problems in chapter 3. Now, after chapter 3, we'll probably have an open book test. And if you can't be in class for the open book test, we'll have to get you a proctor. All right. Now, that open book test, I will give you from 12:30 to 2:30. I'll give you 2 hours. Okay. Class ends at 1:45 to 2. I'm going to give you 45 minutes beyond that. 2 hours for an open book test. Okay, so we got that settled. Remind me of that in case what have you. Okay, we've got John here, and I guess he's married to Linda. All right, he's single. Whoa, wait a minute. John is single. He's 66. He provides 100% of his cousin's support. The cousin lives in Arizona. He wants to take advantage of the presidential element campaign checkoff. John is an accountant. Other relevant information includes assume that Schedule A, if necessary, has already been completed. Complete Form 1040, 2017, but we say 18. Now his salary is $20,000, right? Is that on line 7, Jonathan? All right. What line did you put his pensions on, Cole?
16A.
All right, 16A. All right, we got all those two down. Now, taxable interest income, that should be on Schedule B. What line does that go on? Is that 8 or 9? You got that down, Jonathan? All right. Now, if that's over 400, you got to put it on Schedule B. Okay. RA distribution, what line? That it does have a line, don't it?
15A.
What?
15A.
Now, what does 15A say, Clayton?
Well, it says distribution, but on the column it says deduction.
Yeah, RAs. All right. Did everybody put it online? Where'd you put it, Cole?
32.
Oh, let me look.
Because it's a deduction. It says deduction on one.
Supposed to be what?
It's a deduction.
I better straighten that out. I'll straighten that out.
I put it on first too, but you said which one's distribution. It's really on first.
16A, you said RA distribution. 16A.
That's what you said.
Yeah, you asked us where the distribution was. That's what we told you.
Yeah, 16A. Where did you put it on?
We don't have that. It's deduction.
Look, right here.
Oh, it said a deduction.
Yes.
Well, maybe I better get my eyes checked here. Okay. RA deduction. And I looked at that and I thought automatically distribution. It does go on line 30 what? You did good. I did bad. All right. Itemized deductions from Schedule A. Okay, now first off, he's single. All right. Now, when you added up the front of the form, the very last line, what did you all get on the very last line on the front of the 1040? Right, very last line. Right? Right?
Yeah, 45,000.
All right. You couldn't do anything else but add up his wages, interest, pension. You got 51.3. And he's putting aside a little IRA deduction too. And don't have any qualifier for that. We don't worry about it. That is a minus. You got 45.8. Now take that 45.8 over to the back. That's where we are. Take it over to the back.
Yeah, sure.
All right, so that's where we are. Okay. All right, now, the standard deduction was how much? Now, I noticed Jonathan has taken 8,000. Cole, you're taking what? Clayton, what's your take?
Or 8 months, that's 8,000.
And hold up right there. Hold up. Now, you're doing a 2017 return, so we're gonna let it go at that. 2017, 8,000 would have been better than his 6,000 standard. But we know for 2018, his standard deduction is going to be 12,000. So in theory, had you put down 12,000 there, I'd been okay. But you put down 8, we're gonna stick with that. It's 2017. Remember, when we do a tax return for real though, it's gonna be 12,000. All right, now, last year you got, so how much for an exemption last year? 48,000, 4,000. All right, what'd you put for the next line under exemption? All right, let me look at the line. Okay, Jonathan, this is back. All right, you put 8,000. Then they have 30,800, right? Now Jonathan put down exemptions 8,100. Who else put down 81?
I wasn't sure.
What'd you put in?
I didn't put anything. I stopped here, so I wasn't sure.
Oh, you shouldn't stop.
Well, I don't want to have everything wrong.
Oh, I know, because it's correct. All right, Jonathan, why'd you put down 8,100?
They claimed that himself and the cousin.
All right. Now listen. Under the old law or the new law, the cousin doesn't qualify. Now, if it were a sister or brother, niece, nephew, they don't have to live with you. Everybody else has to live with you part of the year. Did that cousin ever live with you? All right, so let's take that 81 down to 4,450. So everybody put down 4,050. This is 2017 law. Now, Jonathan wanted to look at something though. That 8,000 plus that 4,050 adds up to how much? It will add up to 12 something, won't it? So he's still getting, under the new law, it'd be a smooth 12. Okay? So now subtract what you got. Subtract 4,050 from whatever. How much does that leave?
33,750.
All right, now, we're going to use the rates that your book gave you. Okay, now let me try to find a blank page here. I'm going to bring up Notepad. All right, 33,000 what?
700.
Everybody's on the same amount, right? Cole and, all right, now go to the front of your book. Cole, can you go to the front of your book if it's an e-book? I mean, Clayton?
It's not in the front, but it's like, there's a table. I got, it's just not in the front.
All right, now look at the table. He's single, right? Now, what amount did he make between? He made between what? Look at the top table, single. What did he make between? What's the first line, folks? 9,000 what? What?
9,525.
525? Up to how much?
38,700.
700 and 700 even? All right. Now, what is your tax? What does it say your tax is to start with? 900 and what?
52.5.
That's on the 9525. All right, look at this, folks. That's on the 9525. Now subtract 9525 from the 33,750. And that gives me what, 20? Subtract 9525 from the 33,750.
24,225.
24,200 and what? Now they say the tax rate on that amount is what percent?
12%.
12%. Now multiply and get your taxes on that amount.
2,907.
That. All right, now we're going to add that to the other tax. We're going to round off to the nearest dollar. Is that correct? 3860? All right. Put that down on line what? 3860 down on line what? All the way down here. Filled on this W2 there somewhere.
61.
Yeah, okay, now, wait a minute. Let me see here. We've got to fill in some other lines for us. Line 44. Line 44 is your tax. Line 44.
That number. That's, yeah, is that?
Yeah. All right, now, John, I believe we bring that down to line 56, line 63. Line 56 and line 63. All right, we had nothing else to add or subtract. All right, now find how much was withheld on his W2. That's down the next section. How much is withheld on his W2? And John, you got it there. Did you put it here? Go ahead and put it total tax, whatever line up. Let me look at it again. Got line 56, John. 63. 56 and 63. Put down that same tax of 3860. We're not adding or subtracting anything from it. We'll go fill out that part. Now, how much was withheld on his wages? Right now, look down at line 64. Look down line 64. 6,000. Put down 6,000. Line 64. Yeah, 6,000. Now, write that 6,000 down, but you have nothing else to add to it. Write down whatever appropriate line. Now do what it says to do. Do we get a refund or do we pay? How much refund do we get? $2,140? All right, you got that under refund? You don't want that applied to next year's tax. Now, what IRS does, folks, when we do taxes in January, we electronic file this, and they get electronic deposit. And they will give you their deposit information, and IRS will deposit, but usually within a week or two. They get their refund fast. Okay? But we'll have a lot of practice before then, and you'll be more comfortable with it. So today, we'll call it a day. I read the chapter, folks. Start working on even problems. And we'll probably start looking at chapter 4.